Hello and welcome to the latest episode of the Digi-Tools and Accrual World podcast, brought to you by the Digital Disruptors. And this episode is sponsored by Adsum. It's the platform of choice if you want to be able to aggregate and see all of your tax deadlines from VAT, income tax, corporation tax, etc., and just be able to control the visibility of that so that your teams can manage those deadlines a little bit more effectively and make sure that you're giving clients the right kind of support and advice around making sure that they're not in breach of good old HMRC. And we might be talking about tax deadlines in a little while on some other updates. But before we get into it, I am on the other side of the world, actually on the podcast for the first time in what feels like weeks, and joined by Indi. Indi, how are you doing?
Oh, I'm very good. I'm joining you from the other side of the world as well, from you, but not the other side of the world from most of the people that are listening to this podcast, because I'm here in Old Blighty. It is lovely and rainy, and we're all hunkering down for the Christmas feels. I'll call them Christmas feels. It feels really nice here. It's very like wintry, and all the lights are up, and my Christmas tree is all decorated. I'm starting to be all cozy and giving myself a cup of hot cacao in the morning. It feels great. And like you, John, we're sounding a little bit hoarse.
A little bit hoarse, yes. I had quite a late night last night because it was the last day of the conference that I'm here in Vegas for.
Unsurprisingly. Unsurprisingly.
Yeah, surprising. But with the time difference, that means that I've had about 3 hours in bed. So there you go.
Well, that doesn't surprise. And it's even worse because you're surrounded by cigar smokers by the sound of it.
Yeah, that is a thing. This is what happens when you're with the high rollers, right? They want to make it look like they know what they're doing and play the part. So everyone's smoking cigars down on the floors, which is not ideal, but yeah, it's all good. I'll get better. By the time I'm in DC in a couple of days, I'm sure my voice will be a little bit more controlled.
Well, there's one thing about DC that I love, which is the wine. They go toe to toe on some of the best grapes that you can have in Bordeaux. That if you try them in DC, they have mastered them. And so if you get the chance, wine flights, wherever you are, that's what you need to do.
Okay, that sounds great. I haven't really been drinking much wine here in Vegas, so that's the thing. And I didn't even know that DC was like wine country. It's another
Yeah.
thing to learn.
There you go. Well, there you go. Shall we give the people what they want?
What, for us to bugger off and leave them alone?
Bit of that news? What do you think?
Yeah, I think we should do some app news for sure. Let's get on with it. Thomson Reuters, probably more familiar in their digital sort of branding colours, and they have pushed into the UK probably in about the last 18 months or so. I think it was the Accountex before last where they pushed out their digital audit system that they had in the US but hadn't really brought to the UK for a long time, and then launched it here in the UK. I guess as a bit of a competitor to the likes of Caseware, CCH, and of course Inflow. And now they're building out that suite. They're adding a whole bunch of integrations. Again, these are mainly US-driven integrations. So they're adding in Trullion, Audit Site, and Fieldguide. I'm really familiar with Trullion and Fieldguide. Trullion's a competitor data sniffer for people who are familiar with that in the audit world. So it allows you to extract information from invoices, compare that with the general ledger information that you've probably extracted, and then be able to tie that all together really quickly rather than having to manually do it. And it also allows you to do some work around extraction for lease accounting and revenue accounting, which are all changing in the UK as well. So this is like good timing for, I guess, for Thomson Reuters, because lots of accountants and auditors are looking at that platform as something that will be useful. And then Fieldguide is, I guess, like a PBC system. So it's so you can send a request out to your clients and get some information back. Again, there's plenty of those out in the market, and your Fieldguide's just the one that it seems that they've chosen. Again, there's some weird crossover here because Fieldguide, particularly here in the US, tend to focus more on like just general assurance arrangements and I guess IT audit type stuff, which is not something that a lot of small firms in the audit space will do in the UK. But there you go. So some good stuff in there. And then they've added, of course, AI. Everyone's adding AI to their products. So they're adding that for some audit intelligence to help with how to focus in on high risk areas, and then just added some additional stuff around the methodology. So that's the latest update from Thomson Reuters and their audit ecosystem.
Wow. We don't see much of that, though, here in the UK.
No, it's the audit technology ecosystem has been expanding a lot. I guess it's been driven by early adopters like Inflow, MindBridge, etc., who came in on the data analytics slant and then have expanded their footprint into other things. And I think people have realized, technology providers or vendors have realized that outside of the big four, most audit firms are buying off the shelf products. And so we've seen a huge expansion as like the technology footprints of the large firms, the big four firms, and all of the kind of expansive stuff that they were doing around data analytics, extraction, and all sorts of other things has started to filter down. And it's been driven by people spilling out of these big firms generally and starting products of their own.
So we're quite fragmented, is what you're saying here.
It is. It's a slightly fragmented ecosystem insofar as there aren't that many integrations. So this is an interesting move from sort of Thomson Reuters, but that kind of it's not quite the same as the early days of like when Xero, for example, launched, because they had a very much like ecosystem centric approach to why they wanted to build their product. But what we're starting to see is ecosystem is becoming more important, and I guess firms are demanding now that they don't just want a standalone tool that does one piece of work really well, and then they have to take that out of that system and put it into somewhere else to utilize it or to file it or whatever. And so we are starting to see more and more of this kind of integration. But equally, there's a bit of a battle on people's hands there, because quite a lot of the incumbent people like Caseware, like CCH, etc., are built around their own concept of having a suite of products that they build and design themselves, and they're coming up against the challenges of different mentalities around, build it in one place and keep it all under the same roof, or actually have an ecosystem of products that you can connect through into different things. And it's a little bit of a battle, and I find it incredibly frustrating personally, because having been a user of Inflow and Circuit and a whole bunch of other great technologies for a long time, over 5 years, still don't have direct integrations into some of these products, and I think it is holding firms back, to be frank.
It's not something that you have to do too much of anymore, John. So now you can just campaign for everyone else.
Yeah, on behalf of 350 firms around the world, that's what I'm doing.
Exactly. Yeah. Now they'll take you seriously. I have something different, which is around Xero rolling out one of its biggest automation moves, JAX, automatic bank reconciliations. JAX starts with simple one-to-one matches, but it learns your historic patterns over time, blending the rules and pattern recognition and prediction based on all Xero users. But crucially, Xero's keeping accountants in control. Even when you opt in, you still see every transaction, and Xero surfaces exactly how each one was matched with rule, memory, match, prediction in a new method column. And the remove and redo button means you can instantly unwind anything you don't like. So the pitch is fairly simple: spend less time ticking boxes and more time analyzing the exceptions. It's limited to Xero growing plans and above, and the rollout is opt-in for now, which is smart, because accountants hate being forcibly upgraded into AI, and you can really take the time to see what it's like. So what's interesting is JAX signals that Xero is edging closer to what newer entrants like Digits or Ramp have been doing, which is intelligent continuous reconciliations that shrink month-end work. But Xero's version sits safely inside a familiar workflow rather than replacing it. And for many practices, I think that's a bit gentler on the on-ramp to automation, given that this is something that they are already in the habit of using and they know. Thoughts, John? Ready for your thoughts.
Again, this is another neat little feature, and this is exactly, for me, what JAX should be doing as a product. This should be about automating the process of doing work in Xero, not the gimmicky stuff that we've seen, which is about asking it to give you a report or an update on the general ledger, which is quicker to do clicking in the product than asking using words. I guess a huge area where this would be like really interesting to see if it's effective would be for e-commerce businesses, because they're typically high volume, low value type transactions, very repeatable, or even subscription businesses where you've got the same kind of numbers appearing very regularly and quite often linked to other systems. And I've used, and I know that other accountants have used, RPA powered bots to be able to do this high volume reconciliation in the same way that JAX is trying to do this. So for me, this is like massively appealing if it's going to work in that kind of scenario. I've seen it in Xero already, and I've been asked if I want to switch this on. It's not clear what the limits are in terms of how good a match it has to be before it will automatically reconcile it. So I guess I've got to road test it and try it out. But if it will deal with that kind of, like I said, that high volume or regular recurring transactions, which are very repeatable, then that will be a huge time saver for firms, and maybe will discourage them from using products that kind of roll up transactions on a daily or weekly basis.
How do you think this is going to impact some of the other products that are in the space?
I guess for now, at least, I don't see too much of a competitive challenge for those ecosystem products. Again, I'm a Dex user typically, so I'm most familiar with that. And Dex has already had some functionality in there to auto match invoices to payments that it can see in the reconciliations. And the way that works is it pushes it into the bank feed and gives you the OK box. And so you could see that this would, with JAX layered over the top, would make this process even more automatic, because what you're doing in Dex is saying, oh yeah, that matches, but then you have to hand it off to Xero and then go in and click OK. So if you're removing one of those like small steps, it doesn't sound like a lot, but that could make a big difference. But for me, I think it feels safe, if you like, for the ecosystem products. And potentially, if you look at what JAX might be able to do if it's connected to other products using maybe MCP servers or something similar, you could maybe see that starting to get even smarter, because it can dive into the data behind the transactions. Because again, quite often, what happens if you're using, say, like an aggregator or an e-commerce product is you're getting only some of the like
Mhm.
data or metadata behind a transaction, and actually there's a whole host more held in the main system of record, whether it's Stripe or Amazon or whatever, which helps with that reconciliation process if you need it.
Very interesting, isn't it? Okay, so then I'm going to continue on with my blue freight train. Xero is rolling out its biggest UX overhaul in years, a completely redesigned homepage that shifts the old dashboard into a proper financial command center. And this time, they've actually co-designed it with users. So more than 33,000 of them helped in refreshing the new homepage. It surfaces answers to the questions accountants hear every day. Are we making a profit? How much cash is in the bank? What's owed? What's overdue? Have I been paid? And instead of running 6 reports, the homepage now delivers these insights as real-time widgets: net profit, cash in and out trends, invoice payments, overdue bills, reconciliation status, and all customizable with drag and drop layouts. You can personalize the view and rearrange the workflow and turn the homepage into a genuine action hub, complete with task lists and upgraded watch lists. And it's much more cleaner, much more visual. Rollout is gradual until March 2026, and accountants get a 24-hour switchback option to this. So Xero knows that muscle memory territory is important for its accountants. But overall, it's Xero taking a step towards being proactive in delivering a financial cockpit rather than a passive ledger. And I think that is long overdue.
Yeah, agreed. And I think also the thing that strikes me most about this is that with Xero, I've taken a bit of a tasks approach to this with that widget that they're
Mhm.
adding in to be able to pick up things that need to be done in the product. And I think this feels like a bit of a sort of a focus of lots of products at the moment. I'm seeing lots of this kind of like task-oriented, workflow-oriented things popping up, whether they're widgets, whether they're prompts to go and do something, whether it's a notification or whatever. And I just wonder if this is like the impact that we're seeing of the broader AI stuff, because a lot of the kind of AI hype has been focused on your personal productivity, and now we're starting to see a move into kind of like workflow productivity, if you like, and streamlining workflows and processes and stuff. Yeah, I haven't seen this in product yet. I'd love to see what it looks like. I think if you hark back to one of the sort of very small widgets that's still in the original dashboard, which is like the cash in and out widget,
Mhm.
it's very rudimentary, but it gives you a good sort of oversight. So if there's more of that kind of stuff coming into the dashboard and giving you just that high level visibility of your performance, and yeah, anything like that, I always think is really useful. The key with all of this, of course, is like getting it in people's hands. And again, it'll be interesting to see whether it's this kind of like a banner at the top of Xero and people can just switch it on, or whether as advisors, maybe we get the opportunity to maybe tailor some of this so that we can say, hey, for this business, the users will see this. Because historically, dashboard views in Xero have been user centric insofar as what I see is not the same as what you would see in D, and that's designed by me as a user, so I have to interact with this. And I guess sometimes
Mhm.
what that means is you don't always see stuff. And typically when I've done reporting work for clients, it might be that the CEO wants to see one thing, that someone in marketing wants to see another bit of information, someone in finance wants to see another bit of information. And so they want these kind of tailored views, but they want them to be given to them, not for them to have to go and find them themselves.
Yeah, and I can see that. Many businesses aren't alone in this. I think this is a common issue that most businesses do face is, like you said, cash in and out, just knowing where your positions are, where your exposures are, and how each decision made by a business is impacting another part of the business. I think that's all we're asking for in most of these technologies that we use. So it's not rocket science, but it feels like we're at a point, like you said, the AI precipice, which means that we're much more competent and capable of being able to intelligently prompt it to react. And I think that's what I think the next step will be, because as you said, once you link these systems together, it should just be as simple as you not even defining or designing it in any real labor intensive way. You should just be prompting this for it to display the single views that you want to be available for you, for your client, and then being able to discuss and narrow and drill down on certain elements. So I agree with you. But anyway, that is my blue news for the week.
Let's round the blue news up because I've got one little bit and then we'll move on
Oh
to
my
something
God.
else.
That is so cheeky. You should have given me all the blue news. How dare
It's outrageous that you think I'm in charge of these kind of things, given that we work with Ryan and between the two of us, it's a miracle that we actually got to record
you just
this.
wanted to be able to say that you told some blue news, didn't you? I knew it. Go on then. Share it. We'd better
Here
you
we
well.
go. Bit of blue for the dads, eh? The good old Peter K joke. So it is, of course, the bit that Ryan normally does as well that I've got, which is a Xero App Store update in terms of what new apps have been launched for November. And actually, there's only a handful, so it's quite easy to whiz through this very quickly. And I'm also going to do a Ryan because I'm also going to struggle with some of these names. So we've got, I'm going to say Striven, Striven, a new POS system for hardware and building suppliers with a seamless Xero integration. So that sounds very exciting. We've got a product called B Sharp, which is aimed for South African firms that helps with the automation of the SARS compliance data collection and validation requirements that they have over there. For me, SARS is like a terrible virus, not a compliance requirement. But anyway, clearly that's something that's much more relevant for firms down in South Africa. And then we've got the final one is Nav and Expense, which is an expense reporting app for the US market. All in all, fairly quiet. So not a huge amount going on.
Hang on a minute. I'm jumping in on your hijack of blue news for a moment. There was one in the UK, which was Trove, which helps you get paid quicker by following up on your unpaid invoices. I'm very happy for them. It's really great, but I feel like we've got a lot of these.
Yeah. Yeah, there's a lot. I think Adfin have launched that kind of functionality, and there's Chaser and a million others, isn't there? But clearly someone sees an opportunity, right? So there you go.
Gap in the market. All right, gap in the market. Not sure, but okay. Anyway, congrats.
The news that will not surprise anyone, which is that HMRC announced that there will be a penalty soft landing period for MTD for income tax. Why this is not unexpected is because we had exactly the same for VAT when that rolled out, and we'd already talked about this in some previous HMRC updates a long time ago. The problem is, of course, that MTD for income tax has been delayed and pushed back and rolled over so many times that I think that kind of news has got lost in the way by the wayside a while ago. This soft landing period only exists for the tax year 26-27, which is the incoming one that will be picking up in April next year, and it only applies to the quarterly updates. The usual penalty regime is still there for the annual tax return, the final declaration, etc. So you've got to make sure you get that tax return done. It's just to encourage people to engage with the process, but not penalize them if they don't quite get it right first time. So and there's no other changes, no other delays. So this is just, it's business as usual, really.
You know what? I'm the correspondent coming to you from the ground. Opinions seem to be mixed but fairly predictable. Many see this as nonsense by the day, obsessing over £1,000 side gigs while obvious non-compliance goes on elsewhere untouched by HMRC. Quite a few in the comments, by the way, get your popcorn, openly planning for malicious compliance. So register, ignore quarterly updates during the soft year, then file one cumulative update plus the return in 2027. Seems a little bit devious and evil. We don't have accountants like that, do we? And there's also a bit of a split. Some firms are using MTD to standardize clients onto software and quarterly workflows. Others are proudly not being turkeys voting for Christmas, especially for CIS subbies and micro trades, where software and quarterly reporting are pure overhead. But underneath it all, there's one common theme. There's still no obvious benefit for the clients, just extra complexity, unclear guidance, and since HMRC is kicking the can while trying to not lose face. So I don't think NTD is dead, but the soft landing looks like it's buying time. And I think that's fair for HMRC to do. But I loved reading some of the reactions to this.
I would just say one thing that I think is a bit of a risk for those, what did you call it? The malicious compliers? Yeah. So, and I actually presented on this at an ICAW event a few weeks ago, is that you've got to remember that HMRC has one of the biggest data collection capabilities and databases in the entire world. And they are scraping data not just from the submissions that we make through VAT, income tax, corporation tax, etc., but they're getting data from the land registry, from lots of online platforms like eBay, etc., etc. And we also know that HMRC increasingly use that data to target businesses where they feel that there's non-compliance, and so they're looking for exceptions. So I think if you're going to maliciously comply with MTD, whether you maliciously comply or whether you just put like fairly fudged numbers or estimated numbers in, if they are outside the bounds of what HMRC are expecting, you could potentially put your client at risk of some kind of investigation, which comes with more cost than probably the compliance of dealing with all of this, because they'll come with time costs, professional costs, and other things. So that's my word of warning. I don't have any insight in terms of whether that could potentially happen in terms of nothing's come from HMRC, but I do personally feel that's too much of a risk for a professional to potentially expose their clients on it.
Hey, look, we can only just say that this is a risk, and this is us flagging it up, and this is us officially doing it on the podcast. But for sure, if you read some of the reactions to this, that's come from somewhere. It's that point, like you said, okay, it's inevitable this is happening, so let's just do it with the right spirit, play with the spray. What you're saying is play with a straight bat, which we appreciate.
Yeah. It's a good cricket analogy while the Ashes are on.
Yeah, exactly. Which one?
And I think the final bit of news as well, this is the only thing I think that wasn't leaked prior to the budget happening, was that the UK is finally catching up with the majority of the rest of the world. In fact, that we're going to be having mandated e-invoicing from 2029. That was announced in the budget a few days ago. It will be, for the time being, for all B2B transactions, so business-to-business transactions, and going to be introduced from 2029. We don't actually know quite the exact dates because there's going to be a consultation later in 2026 to go around this, and it's highly likely that they'll use PEPL, which is a European standard for this, so that'll make life easier. And this dovetails into a broader thing that we're seeing, particularly in Europe, where we've got some standardization around this happening in the European Union, linked to VAT. And to be perfectly honest, businesses in the UK were going to be caught and captured by this as a consequence, particularly if they trade overseas or if they're buying product in from overseas. Even small businesses were going to potentially be caught by regulation in other territories. So it's good that we've now got this in the UK. It's far too late. We needed this like 10 years ago, but here we are.
That's great. Brings us to the end of an app news. And sad that we've missed our third wheel in Ryan and our fourth wheel in Lee. And hopefully you and I will catch each other again, John, on the next podcast. But for anyone that is also interested in joining us, we're going to start an open call in the new year. So we want to hear from every single accountant that's in our market. Just talk about some of the news that's coming out, some of the softwares that you're using. So once we post that open call, put your name down in the diary for a recording date, and we would love to have you on.
That is very exciting. I'm really looking forward to actually having some more guests on the pod in the future. And of course, we always get some great insights when we get people on who've got lived experience either in the vendor world or the accounting world. I think people want to hear that kind of stuff. So let's make sure we do that.
Bye, John. Bye, USA, John.